Tesla has officially just cut prices again for all of their models, and some of these price cuts are pretty steep. This is the fifth time Tesla has cut prices since January. Now, I think a lot of us are Tesla investors, or in some way, shape, or form have exposure to the EV sector. So I think this has some broad implications, and we'll talk about how investors are likely to feel about this coming on Monday. On top of that, you got the jobs report that came in a little bit weak today. We'll get into it. On top of all of that, Tesla has officially cut prices on all of their models by quite a bit. This is the fifth price cut since January, and I think this has some implications for the broader EV industry. And I think most of us are Tesla investors, if not have exposure to that EV sector. Now, on top of that, we are going to get into the jobs report that came in today a little bit lighter than expectations, and also the important catalyst to watch for next week. Little secret here, you got CPI in the Fed minutes. So we're going to get into it. Guys, hit the like button if you like this information. It does help out the channel a lot, helps the algorithm. I'm sure you guys have heard that only 1,001 times, but it really does help. But nonetheless, let's get into it. Tesla cuts prices for the fifth time since January. I just read that to you guys, and boy, that's a lot of price cuts. It says Tesla cut prices in the United States between 2 and 6% on its website, showed on Thursday, as the company extends a discount drive on its electric vehicles that analysts caution could hurt profitability. And that's the first thing I want to point out. It's going to hurt profitability unless they're making it up some other way. And there's a lot of other ways you can make this up. Maybe their raw materials have now gotten cheaper since commodity prices have went down. This would offset some of these price cuts. Maybe their transportation and delivery has gotten cheaper, right? Maybe they're more effective and efficient. Maybe they're reducing hours for employees. That would be in that realm of efficiency. There's a lot of different ways that Tesla could compensate for these price cuts. I wouldn't throw them to the wolves just yet, but it's a lot of price cuts in a very short amount of time. And maybe that's because Tesla just wants to give you some blowout numbers. Or maybe it's because demand is not as good as what they were hoping for. After all, Elon Musk keeps calling for the Fed to cut interest rates, which again is a sign maybe things aren't so good. What we heard on the last earnings call was they have almost 2 orders for every 1 vehicle they can produce. So that was very positive. That is what caused Tesla's stock to go higher. We're going to get earnings here very shortly, and you need to hear something similar than that, or some of these gains could go back. Now, Tesla cuts prices on both versions of its Model 3 sedan by $1,000 and on its Model Y crossover by $2,000, the website showed. It also cut prices on both versions of its more expensive Model S and Model X by $5,000. The company has said the tougher UF standards would reduce the $7,500 tax credit available for its base near-wheel drive Model 3 since January. Some analysts who expected the further price cuts had flagged concern that Tesla's industry-leading profit margins could be at risk. This week, Tesla reported first quarter deliveries of almost 423,000 vehicles, up just 4% from the prior quarter after price cuts in the United States, China, and other markets, aiming at spurring demand. Tesla set a target of 1.8 million deliveries this year. Tesla has cut the price of its Model 3 by a cumulative 11% since the start of the year, with a 20% reduction on its base Model Y. So, like I said, guys, just to round this off for you, I wouldn't come to drastic conclusions. I'm sure if they're cutting prices, they're becoming more efficient. Their materials are going down. Something else is happening. I don't think they're all sacrificing margins, right? And that's the main story. If you got a 10% profit margin on their vehicles before, I don't think they're going to cut prices, 20% for the Model Y and now have a 8% profit margin. I don't see that being the case. Maybe there's some give there, but not quite a 1-to-1 ratio. And hopefully that makes some sense to you guys. If you've bet on Tesla in the past, it's been a bad bet. So, yeah, I think we'll be okay. Now, the jobs report. Job growth totals 236,000 in March, near expectations as hiring pace slows. Non-farm payrolls grew by 236,000 in March compared to the Dow Jones estimate for 238,000 and below the upwardly revised 326,000 in February. Forget that. I mean, that's something here, right? As hiring pace slows, the labor market is so tight that it's going to slow eventually. You can't just have hundreds of thousands of jobs every single month being added. The economy is not big enough for that. The population is not big enough for that, right? But the unemployment rate ticked lower to 3.5% amid an increase in labor force participation against expectations that it would hold at 3.6%. Now, why that is key, on one hand, it shows the economy might be better than expectations, right? After some of the not so good data that we got for last week, that's one thing. But on the other hand, markets are fearful about the Fed and inflation. We're going to get inflation data in this upcoming week, and we'll talk about that here in a second. But it's going to show the Fed is not going to be able to cut interest rates. And that's what a lot of this rally has been based on. Now, if you guys take a look at the 10-year Treasury, it is actually trading here today. The markets are not open, but it is trading now at 3.40%. This is up 0.1% today. 11, almost 12 basis points. And I think this is going to be the big problem you have on Monday is investors are selling their bonds. They're expecting less rate cuts after this, but they're expecting the Fed to stay higher for longer and raise rates more than what we were previously expecting. Now, if you take a look at the Fed funds rate monitor tool, this is where you can monitor the probabilities of getting a 50 or 25 basis point rate hike or a pause. Well, 34.5% of investors are now expecting a pause. Yesterday, it was 50% of investors. Yesterday's probability was 49.5% chance of a 25 basis point rate hike. After the jobs report that we got today, it's now a 65.5% chance of a 25 basis point rate hike. And that's why this data in this next week is going to be so important, because it's okay if the economy is tight and labor market conditions are tight if inflation comes down, right? If that's working. Well, if it's not, you got a very big problem. And coming on Wednesday, on Monday and Tuesday, you really don't have any economic data coming out that is going to move the markets, literally nothing. But I think markets are obviously going to react to this jobs report, to the bond yields moving higher coming on Monday, and that's probably going to give you a pretty negative reaction in the markets. Let me be honest with you guys. But Wednesday, everything will ride on the inflation report. Inflation rate month over month, the headline number, you were expecting that to come in at 0.3%. Last month's reading was 0.4%. Core inflation year over year, you were expecting that to come in at 5.6%. Last month's reading was 5.5%. So that's ugly. Or nope, you're actually expecting 5% for the inflation year over year. Inflation month over month still sitting at 0.3%. Inflation rate, the headline year over year, you're expecting that to come in at 5.8%. The last month's reading was 6%. Core inflation rate month over month, I think this is the most important one. You are expecting a 0.4% increase. That is in line. If you go ahead and pull up the calculator, 0.4 times 12, that's 4.8% annualized inflation. That's not good. If you were to come in, let's theorize here, at 0.3%, times that by 12, that's 3.6%. That's a little bit better, but where you really need this number to get a Fed pause, not even rate cuts, but the Fed pausing is probably about 0.2% month over month. That's 2.4% on an annualized basis. But I don't think the Fed's going to cut until you're seeing negative readings here, until you're seeing inflation negative. And that could take a while. But the core inflation rate month over month, like I said, 0.4% is the expectation. Last month's rating was 0.5%. So you are expecting some pretty high inflation numbers here. After all, OPEC just cut production for oil, and that does tend to have a direct correlation with what inflation does and with what inflation expectations do. Now, after the inflation report coming in at 2 p.m. Eastern Standard Time on Wednesday as well, the FOMC minutes will come out. Now, if you guys are unfamiliar with the FOMC minutes, they don't always give you the biggest reaction, but they do give you a reaction, meaning that sometimes if you get the minutes and the markets fall, doesn't mean the markets have to keep going down. It's not like the FOMC actual meeting here, right? It's not like the press conference Fed Jerome Powell comes out. This is a document that is released, and it's the transcript essentially of the last Fed meeting. And why the markets care about this, why it's highlighted in red here on Trading Economics, is because it can give you some indications on who was voting for what or why, or why they did what they did at the last Fed meeting. So it can give you a little bit of new information, a little bit more clarity that you don't always get from Fed Jerome Powell during the press conference. Now, on Thursday, PPI month over month for March, you were expecting that to come in at 0.1%. Last month's reading was negative 0.1%. So you definitely want to see that come in negative as well. That's going to be a good thing if it does. If it's positive, well, that would show an uptick in producer price inflation. Now, core PPI, you're expecting 0.2% of an increase. Last month's reading was 0%. So a bigger increase in that core PPI, again, would not be good. Initial jobless claims also going to be coming out as well on Thursday at 8:30 in the morning. You're expecting 239,500. Last week's reading was 228,000. So you are expecting an uptick there as well. You are going to have actually no Fed speakers. You're going to have Bank of England, some speakers over there. Doesn't always give the markets a reaction, though. Now, this is going to be huge, guys. This is going to be a big one as well. Retail sales, month over month. You were expecting that to come in at negative 0.9%. Last month's reading, you were expecting 0.4%. Negative 0.4%. It came in at negative 0.4%. So if retail sales are worse than negative 0.9%, that's going to be a very, very negative thing. And basically all across the board, all of these catalysts here, import prices, export prices, retail sales year over year, industrial production year over year, month over month, manufacturing production, capacity utilization, retail sales excluding autos, all of this you're expecting to be in firm negative territory. So besides retail sales year over year, but still you're expecting that to come in at 3.2%, down from 5.4% last month. So you're strongly expecting retail sales across the board to drop by quite a bit. Also, and that does come out at 8:30 in the morning. At 10 o'clock in the morning, you get the Michigan Consumer Sentiment Preliminary Survey for April. This is huge. The markets do react very aggressively to this because it gives you inflation expectations. And really, Michigan 5-year inflation expectations are huge. Last month's reading on the survey, it came in at 2.9%. You're expecting 2.8%. If inflation expectations do go higher, that's not going to be a good thing, because if you look at this chart, inflation expectations directly correlate with increasing inflation. You could see back here, this was April 2022, is 3%. You hold steady at 3%. It just went up to 3.1% by June. And you got a big inflation spike for really not the first time, but it really started to get higher and higher around that period. And it did correlate with inflation expectations going a lot higher. Now, inflation expectations actually dropped a lot after the stock market was hitting its lows. So that's maybe what you need to see here. But guys, that is going to do it for this video. That is your wrap up of this week, as well as the Tesla price cuts and the job numbers that just came out. On top of it, I should mention you're going to have a few bank earnings, and then you're going to get more earnings coming out the week after that as well. So you really got a huge week upcoming, and I hope you guys are prepared for that. If you're not, well, there's time to prepare on Monday and Tuesday because nothing's going to be happening on those days. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. Enjoy your Good Friday and your Easters. Let me know down below in the comment section, what are you guys doing for your Easters? What kind of food are you having? Food sounds great right now. Maybe I'm just hungry, but that is it. Don't let me go on a rant too far here. I will see you guys in the next one.